Tell me, what is the growth trajectory? How can you penetrate yet further the market and disrupt, basically, financial institutions?
Look, today, more than ever, rent prices continue to soar.
Yeah.
And one of the things that banks and I think startups have missed is, on one hand, you have startups trying to huck cryptocurrencies to people, and then banks still running a model from 20 years ago. And we said, if you look at our generation, the biggest expense people have is rent. Why don't you get anything back for that?
Yeah.
Right? Why can't I build my credit history just by paying my rent on time? Or why can't I earn points and miles to travel the world by paying rent? And so, it took us 4 years to bring together the real estate industry, to bring together the payment networks, the banks, the airlines, the hotels. But 14 months ago, when we launched this, we weren't really sure how fast it would pick up.
Yeah.
Right? What's been crazy to see is that, less than 14 months, we've had over $3 billion of payments going through this just on the rent side. People who have signed up for the Bilt MasterCard, which lets you pay rent at any apartment and earn points, as well as replace your kind of everyday card, that's seen over $1.6 billion of spend already. So you're seeing this massive uptake from a generation saying, hold on a second, rent is my biggest expense.
Yeah.
If you can give me value there, I'll be loyal to you across all of my other spend categories. And by the way, if you can help me build a path to home ownership, that's really how you lock me in.
And so talk to me about that path to home ownership, because it's about building up your credit quality, but how else?
So look, one of the challenges with home ownership, and I just bought my first place here.
Congratulations.
It was so complicated, and I consider myself a financially astute individual. But you look at that and saying, I'm going to spend X amount a month. Let's say your New York rent, which by the way, the average New York rent is almost $6,000 now.
You do not need me
right?
to do not need to preaching to the choir here.
First of all, about time you start earning points and miles on your $6,000 a month rent payment. But now you take that and you say, well, how do I even know if it's better to rent or own? How can I compare that? And today, nothing existed. And so we went out and we actually partnered with Fannie Mae, Freddie Mac, and FHA, and built the first tool where you can actually see, based on your credit profile, your income, real-time interest rates, say, here are the homes that you could buy for the same monthly payment as your rent. And you can compare apples to apples. And if you're ready to buy, we also got regulatory approval to use your points to cover your down payment. So that went live this morning, by the way.
Congratulations. You're talking points, you're talking rewards, you're talking Gen Z and millennials. I can only infer that Amex is looking at you in particular. Who are you in terms of income level? Who are you in terms of demographic? Who is coming to you?
So the vast majority of our cardholders and the vast majority of our loyalty members are 21 to 35, right? So if you live in a high-rise building in a major city in New York, LA, San Francisco, Chicago, Denver, chances are you're living in a Bilt Alliance property, which means you're using Bilt to pay your rent at all of these buildings. Then you also have 21 to 35-year-olds who live in other buildings, or mom and pop landlords, and they're signing up for the Bilt MasterCard of the Wells Fargo, and they're getting to earn points and build their credit for no annual fee, right?
So when you're raising this money, is it about marketing? Is it about doubling down, eating into market share? Is it about building partnerships? Is it about hiring? Where do you look at in terms of your to-do list?
Yeah, so one of the things that we've spent a lot of time with at this business, a little different from our peers in Silicon Valley, is profitability. So Bilt is a profitable business. So when we looked to grow the business, we weren't actually looking to raise money. It was an old friend of mine from Left Lane Capital reached out and said, hey, there's an opportunity for us to finish bringing together strategic partners into this business if we do a large financing together. And so led by Left Lane, we went out and we brought partners like Greystar, who's the largest property management company in the country, Invitation Homes, who's the largest single-family rental company in the country, and then even our banking partners like Wells Fargo to double down and really build that defensible moat around this business, right?
So is it about, in this landscape where, look, valuations are coming down, people are not just writing checks in quite the same
100%.
liberal manner that they were, is this about strategic investors? Is this about a valuation that was slightly lower than you anticipated? What was it like raising money?
I'm not one, I don't believe in playing the valuation game, because inevitably that, all these things come to an end, right? And so even as we were doing this round, we actually looked at fairly conservative, publicly traded comps, which I know is a heresy to say in Silicon Valley.
Like who? Who's a comp for you?
If you think about a lot of the work we do on a loyalty space, it's not that different than a payment network like MasterCard or Visa. And so when we look at, if we're taking a piece of transactions, whether that's rent or your dining, right? And we can start to clip that on all of your biggest expenses while rewarding the customers, then that's not that different from a payment network, right? And so that's how we really built the valuation. That's how we built the business. And look, I think today, entrepreneurs should be focused, number one, on strategic capital. You know, we were lucky to get that both from Left Lane Capital, but also from our real estate partners and our banking partners who get to work with us on the payment side and on the investment side.
Well, I'm looking at a Visa. I can bring it up on the Bloomberg. An estimated PE ratio forward-looking is 23 times. They're trading at a PE ratio 29 times in the here and now. They are a company that just had their earnings and actually are raising their dividend, giving more money in terms of a buyback to investors, and they're saying that the economy is still pretty strong. Are you seeing are you seeing a slowing down of payments from your customers? What does the environment look like?
So one of the other exciting things I think when you think about this type of business is that it's fairly counter-cyclical to any recession. And so when in good times, you see a lot of spend, whether it's on retail or travel, which we see on the Bilt MasterCard. But even in downturns, you still see that rent continues to be an expense that most people still have to pay month over month. And so if you can make that a better payment experience, right, and reward them, our business stays fairly recession-proof as consumers change spending habits elsewhere. Right?
And what about you and hiring? And are you based in New York? What is your...
So we are a New York office. We are probably one of those crazy companies that have believed an in-person office. And so our team has been coming in since it was allowed in 2021. And so we continue to have folks come in. And I'll tell you, like, that has been one of our best recruiting tools, too.
Being here in New York?
Is being in New York and telling folks that we are an in-person culture and that you can come in and work with other really smart people to help solve real problems that affect, frankly, our own employee base and their friends.
So is there any hybrid? Have you said, look, we'll fit for your purposes?
Yeah, look, I think it's really important as a CEO in today's economy to be clear on where you stand. I think it's that ambiguity that's been very hard for folks, because then you feel the pressure to go in, but don't know if you should go in and no one else. And so we've just made it really simple. We're an in-person company. If you need to take time and be flexible, we're totally okay with that. But I got to tell you that the productivity, the morale, we've had no turnover at this business really in the last 14 months since we launched the product. And I think that's a testament to people just having those relationships, those friendships, and candidly working on problems that actually matter to society today, right? And I think what I'm really excited about today is this built home stuff. I mean, if we can help young people understand what it takes to go from renting to home ownership and make it as easy to understand as, here's what you're paying in rent, here's what you could buy for that same amount, and by the way, here's how much you need to save, and if you want, you can use your points to cover that down payment. I mean, that is going to be the most important driver to fixing inequality in our generation, because otherwise, a small handful will get to buy homes and build wealth, and everybody else will be left behind paycheck to paycheck. And I think if we can help move the needle even a little bit on that, it's a really motivating opportunity.